Hey guys, welcome back to another video. I'll be going over very quickly today's trading day. So I did take a trade and it was an $80 loss, so it's very small, practically break even. But yeah, I'll kind of be going through what I was looking at. So starting off, we have no news events on Friday on May 15th. Then when we go to the higher time frame, we can see that we are still overall, in this bullish range, but overnight price expanded lower quite a lot, and as we can see, the day was already a pretty big downside move already. We are tapping into this order block on the daily, but it seems like we're just not reacting too bullishly off of it as of right now. A lot could happen in a trading day, but as of right now, it doesn't seem like we're getting much reactions. It seems like we've had a pretty bearish shift overnight. And when we go to the intermediate term time frame, we can see that we don't have a previous day high SMT, but we do have all assets closing below previous day low, which could show that we could expect lower prices today. As you can see, we also had a strong market shift down through this low, creating this bearish range. And right now, not right now, but at the time of the session, we were around here, and we were tapping into this order block right here. So yeah, this up close candle is an order block, and we were tapping into it right here. So we don't really have the high time frame technically is bullish, but it's starting to seem like we're shifting bearish. On the intermediate term time frame, we have invalidation of previous day low, but not necessarily a intermediate time frame SMT on the highs. So things are pointing bearish, but I don't think it's as clear as other days, you know. As I said here, I would say that with this expansion low and previously low being invalidated, we are more likely to look for continued lower prices. So for my bias for the day was bearish / neutral, and my thoughts today was I was just bearish because of structure, and I did take 2 trades today. So this was the first trade. Actually, maybe I'll just go on the chart. We had a previous 5-minute SMT right here, something like this, with a yes and YM, and then we had this bearish change in state delivery, and I entered here. And then as you can see, I had this box marked out as a resistance area, and I entered because I'm still kind of reflecting. I don't think I should have entered on this position because I want to be taking more A+ setups now that I'm in drawdown, and I wouldn't classify this as an A+ setup just because high time frame is still early signals of turning bearish, and we don't have any intermediate time frame SMTs confirming that. It's more so just structure. We were bearish in structure, and we seem to be wanting to push lower, so this was the idea. This 5-minute SMT occurred inside this order block. So imagine at the time we were here, this order block right here, it's up close, we were tapping into it right here. So we can see a bearish move happen from order blocks or fair value gaps and just continue lower. We also had these lows right here resting. As you can see, these relative equal lows here. So we were inside an order block and got 5-minute SMT and a good push downwards, and I entered. And then when we had this, you see that this is a wick. We had this whole candle was red, or black in this case, and I brought stops to break even at that time because I didn't want to see this level that had been, kind of rejecting price. I didn't want it to support high. I wanted to see it break. So when it was all the way down here, I brought it to break even. And then we saw price get bought back up, and I was already stopped to break even, which I was fine. And then we got right up here and we just crashed lower. I did kind of take a FOMO trade right here because I saw it crash lower. I thought we were going to get a nice kind of like momentum push. But after I entered, price was just stalling here, and I just recognized that I didn't enter that second trade off the best reasoning, and I should have just stayed patient and waited for either a new SMT to form or things to just be a bit clearer. So I decided to just close it for a small loss and just come back another day with maybe a bit more of a clear outlook. Overall, it would have been a full loss because price then reversed, and I did, the loss wasn't too bad. So it was, what was it? Account history. It was an $82 loss. So it's like 0.1 R. Not too bad, but also not too pleased with myself with the performance today because I shouldn't have entered this second trade. That was purely kind of like seeing this big shift downwards. I thought I was going to get the trade that I was expecting, but I think I just should have stayed out and waited for a better day. Not necessarily that this was a bad trade to take. There was a reason for it, just not as much confluence as I normally like. And now that I'm in drawdown, I would like to probably stick with A+ setups more. Anyway, so that was it for the day. And funnily enough, if we go to the 90-minute chart, we can see that we didn't react off that order block, but we did come up here and take out this swing high, which is internal range liquidity. Internal range liquidity can be in the form of a fair value gap or a swing high. So we took out that swing high and we saw some heavy sell-off, and now we're displacing back down. So it seems to me that price is pretty bearish right now. It seems like we are shifting bearish. Going into next week, I would expect this swing low to be a target. Why is that? So as you can see on the daily chart, it's a swing low. We aren't reacting off this order block. We're just continually pushing down. And also this swing low aligns with this weekly fair value gap. So next week we're gonna print this fair value gap, and then it's kind of a external range liquidity to internal range liquidity play on the weekly. So I would say that this daily swing low is a good target for short-term bearishness. And so that's kind of what was the day like for me. Definitely upon reflecting, what I'm going to be doing next week is just taking better setups. I would say that setups with a bit more confluences behind them. Now I think the bearish narrative is a bit more solidified, and going into Monday, if we have bearish SMTs on the highs and this target is still intact and we're still looking like we're shifting bearish, then I think this is a solid framework. So yeah, hope this was insightful, and I'll be seeing you on Monday. See ya. Bye bye.